The FTX sudden collapse remains one of the greatest shocking events in the crypto market last year. But just like they say, the toughest seasons make the strongest people. Cardano turned out to be one of the best coins, backed with huge demand and resilient from external shocks. But the crypto environment and the financial state of major countries are not suited to enable the thriving growth of altcoins. Big countries like China have begun to make major moves that could make or break Cardano ADA and other cryptocurrencies. Going back in time to observe the network's significant leaps so far, it has really been a turbulent journey. The promising network began to make its moves in 2021 when the crypto market was resuming a rally, which was tagged by some analysts as a super bull cycle. Back then, Cardano ADA was one of the best performing coins in the market. The coin even surpassed Binance Coin to become the third largest cryptocurrency by market capitalization. The ADA price surged higher after setting a new all-time high of $3. At that time, the general cryptocurrency market was advantaged as Bitcoin had touched the $50,000 level again, and Ethereum successfully cemented its price above $3,500 and was trading at $3,775 per coin. Cardano's rally coincided with the launch of its Alonzo testnet as the network prepared for a mainnet launch. The Alonzo upgrade introduced numerous changes to the Cardano blockchain, including the astonishing smart contract features with the availability of smart contracts. The blockchain hosted a wide range of decentralized protocols and NFTs. Just as you know, DeFi and NFTs are some of the hottest spices in the crypto world, and they keep gaining massive adoption globally. Hence, the expansion of the NFTs and DeFi to Cardano blockchain was enough reason to justify its bullish rally. The 2021 crypto market was characterized by a bullish trend despite the slight correction experienced in the summer, and even some analysts did not fail to believe in the prospects of a super bull cycle. A popular crypto analyst, Michael van de Poppe, wrote, "We are entering the second phase of the super bull cycle, and I like it. Enjoy it." Indeed, the cycle saw the prices of most cryptocurrencies double or triple over several months. Van de Poppe even believed that the trend would linger for a long time, but as we all know, this was not the case. As investors began to discover the benefit of burying into projects with interesting long-term potential, the market is looking for safe haven assets. Cardano ADA is gaining more attention than it has ever done, all thanks to the FTX market collapse, which swiveled investors' appetite for the cryptocurrencies they have been sleeping on. The Cardano network recorded a 400% hike in its on-chain activity since the news broke on FTX's financial crisis. The Cardano founder, Charles Hoskinson, keeps warning that there will be tighter regulations coming for the crypto industry after the FTX collapse. This was an indication that buying into real and in-demand projects was worth it. However, Cardano investors are not yet satisfied. 2022 was a tormenting year for their investment and faith in Cardano. They want to see the ADA coin price skyrocket and get high returns on their investments. In the same way, it is always a pleasure to see upgrades flow in like breezes. But one thing is worth emphasizing, the success of Cardano ADA is depending on the thriving of the market in major economies, and a notable example is China. There have been significant market swings in the Chinese stocks as investors went from dreading the future in China to hoping that the economy will return to more normal levels. 3 years of COVID restrictions have taken a toll on both the people of China and the economy. Protests last month include the capital city of Beijing, which brought people's frustration to the table. The government, and of course businesses, risk increased conflict in the strict zero-COVID policy continued. This policy has caused stocks to fall in recent weeks since the government's response appeared vague. Well, the answer is quite obvious. The government will likely start loosening zero-COVID restrictions in the country. Of course, this won't be a speedy or easy process for China. Early reports estimate that the economy won't fully open until mid-2023 at the earliest, mainly due to the ample time needed to vaccinate millions of elderly people who are yet to be vaccinated. And as a result of the experience of the rest of the world, it will be a tumultuous experience opening businesses and going to social gatherings. The market is worth anticipating, even though it would take many months for the Chinese economy to open, and this is a good sign for stocks. China has a sound history of controlling its economy, and this may be the case where investors start getting ahead of themselves. As a result, China could slow down or reverse course if infections get bad. Even when the economy does open, a policy change could destroy the value of US traded stocks. This could follow the same pattern as the Chinese education stocks. It is pivotal to remind investors that investing in China comes with major risk that people don't often think about in the US. The government oversees much of the economy and society, so an alteration in sentiment could crush investments. Also, investors don't own direct assets in China. They own variable interest entities, which are entitled to the gains of the Chinese company. Chinese stocks have had a big bounce on the news of the country's reopening, but much uncertainty remains. It is not yet clear that China's besieged economy will snap back, as COVID cases are still raging across the country. Meanwhile, just as it has been emphasized, even though the government appears to be easing on its regulatory stance, the prospect of excessive regulation will continue to be a risk looking over Chinese tech stocks. These fears do not evade the fact that there is room for upside, given China's reopening continues and the government stays out of the way. China's tech sector has been in a 2-year bear market, and many companies have cut their costs to become more effective. For now, China stocks may be more of a trade than a long-term investment, since there are still various political and geopolitical risks to combat in the country. At certain times, the Cardano founder has gotten involved in China's economic system, which always appeared to be graced with loopholes. Last year, he ironically commented on the situation around China's banking system, expressing his regret that the world had no digital cash system that does not demand reserve storage and is available anywhere in the world. With his claims, Charles Hoskinson alluded to cryptocurrencies and blockchain, which from his perspective are a real and valid alternative to traditional finance. The issue was that since April 2022, 4 rural banks in central China's Henan province have frozen millions of dollars in deposits, choking the livelihoods of hundreds of thousands of their customers at a time the economy was hit by the pandemic restrictions, and of course it was difficult to survive. When things got tougher, affected depositors staged demonstrations at Zhengzhou, the administrative center of the province. When matters rose to greater escalation, the Chinese authorities dispersed the riot. The situation was quite unpleasant, as it potentially marked the beginning of a possible crisis. Well, China is still known to be a fierce opponent of cryptocurrencies, and Chinese residents never had the opportunity to use any digital cash system, be it Bitcoin, Cardano, or Ripple. However, there were a lot of direct impacts its prosperity as an economy will impose on the crypto market. Moving forward, the China Digital Asset Trading Platform, the country's first digital collectible marketplace, was unveiled on January 1st, 2023. An official ceremony celebrating the launch of the marketplace took place in Beijing, China, which had long cracked down hard on Bitcoin mining and the broader crypto industry last year, which widely uses the term digital collectibles to describe what is otherwise known as non-fungible tokens, or NFTs for short. Early last year, China's state-backed blockchain services network launched a platform for issuing and selling such tokenized digital collectibles, but with no crypto allowed. This implies users have to use Chinese yuan to pay for collectibles and platform fees. The speculative aspect of the digital collectibles sector in China has been pretty much restricted, with no secondary trading permitted. The debut of the China's digital asset exchange seems to change that, even though cryptocurrencies like Bitcoin and Cardano will still not be available. Cardano has also had a rough go following its 2017 launch when it was unable to drum up significant development activity, which saw the ADA price drop. It had so many loopholes, a few of which are still evident. However, with the immense flow of catalysts, Cardano has risen to a significant level. There's still more catalysts on the horizon that could catapult its price higher. So far, Cardano has been doing well, but it is set to do so much more if various factors in the market and major economies align perfectly. But of course, what are your thoughts on this? Let's have them in the comments section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.